What's going on, guys, and welcome back to another video. In this video we're going to be covering a very simple 3-step analysis process that you can use to minimize your chart time and maximize your trade entries. So just before we get into the good stuff, guys, and we get into this video, I just want to say, if you do find this content useful, please drop us a like and a comment. It helps us get to new people that are trying to learn, and it also lets us know that you appreciate the work that we put in. Enjoy the video, guys. So guys, as stated in the intro, we are going to be covering a very simple minimalistic analysis approach that is going to help you alleviate those hours and hours that you sit looking for trade setups, and it's also going to allow you to be super flexible with when you are actually looking at the charts, when you're really putting your time in, and it's going to also give you some very clean setups, always with a precise target and a precise stop as well as a precise entry. So in today's video, we're going to be walking you through the criteria that will need to be met for the entry, the overall entry system itself, and how you can begin to apply this to whatever time frames you trade on. So for reference, guys, this is the entry model we are going to be focusing on today, and how we're going to show you can really minimize your chart time and get these entries consistently across the span of a week. Now, of course, there's a couple of factors that is going to define to you the frequency of this trading system, and also how often you are going to have to look at the charts, or how often you're going to have to reevaluate the charts. But for reference, this is the entry model we're looking at. It is reversal based entry, and there are 3 key elements that have to be met for this to be a consistent entry model. So what we're going to do is we're going to walk you through these points. As we follow them down, we're going to reference back to our charts, and we're going to show you the entry that we have just behind this picture, which is the euro entry that is running right now. Okay, so to start things off, we have a higher time frame requirement, an entry time frame requirement, and then a requirement for the entry itself. So there are only 2 time frames required for this. Whatever your higher time frame is, so your preferable time frame, and whatever your entry time frame is, again, it's down to you what you prefer. Personally, I've been using the 15 and the 1 minute because this allows me to find maybe 3 to 4 ranges per day, and up to 3 of those ranges will give an entry that may work. So the first thing we're going to do is structure must align with your move. So this is a very simple idea, and that is that we have higher time frame narrative leading the way. So if we're using this narrative, we are going to reference the 15 minutes. So what we're actually going to do is pull this chart down, and we're going to reference this trade idea itself. We're going to go to the 15 minute here. We're going to get this out of the way, and we are going to rewind just for the reference purpose here. And then we're also going to pull your entry model back and forth so you can see exactly what we're looking at. Of course, like every entry, this is not guaranteed to work every time. I'm not claiming it to be 100% hit rate, but you are going to see very consistent entries. And if you are in the Discord, you are going to see our members use this entry rule set consistently, and they're always getting really nice entries. Some partials, some BEs, but we know how the market moves, and we should expect ultimately nothing more than what the market is willing to deliver. So the first place for us to start here, we are just going to delete this stuff here. First place for us to start is establishing our directional bias, and this is easy for us because we're using the 15 minute. So these red dots represent the bearish structure. Now, we were technically bullish within here. We broke down bearish, and we have been bearish ever since. We had a very sluggish run of the low here, and this morning it came down, broke the previous low, and gave us this range. Now remember, if you're looking at these structure points thinking, where are these, how is this relevant structure? If you don't know how to read market structure, then make sure you check out our video on market structure, which is in the YouTube. So the main key element for us here is following the 15 minute range. So the 15 minute range itself is delivered from a new high down to a new low. Now the reason this is important is because this range is going to define to us if we are in a adequate condition for us to trade. So what direction is this range traveling in? Okay, it's bearish. Let's just form that low. Okay, there's our low. Is price action bearish currently? Yes. Are we in a bearish range? Yes. So we have structure must line up with your move. So we're going to expect to sell, and we are seeing structure lining up with what we want to see because we are in a bearish range. So we must have an area/zone, so an FEG or an order block. Now, the reason for this is because you can have ranges like so, but if they have no unmitigated order blocks, no fair value gaps or impulsiveness to show that price is willing to continue this direction, this is a range that we realistically will avoid. So we can see within this range, we have a fair value gap here and a fair value gap here. Now, for many of you that are a bit more versed in trading, you will know the number one rule whenever you establish a range is defining your relevance within that range. Now, in this case, we want to be trading plus 50% of this range. So anything in the premium of this selling range or in the discount of a buying range. So right here, you can see that we are just going to simply ignore this first area of imbalance and we're going to focus on the next. Now, of course, you don't have to focus on the imbalance itself. This is just something that we highlight to show relevance within the range, to show momentum, to show mass orders. You can, for example, locate your nearest order block and you can look for price to tap into here. Now remember, the further you get into the range against the directional bias that we are currently in, the less likely it is a pullback to occur. So what we tend to do is focus on the fair value gap, and if you have price pushing slightly above it, so be it. It's always going to come back down to the lower time frame or your entry time frame before you even get into a position. So the relevance has to be given within this range. So we need an area or zone. Do we have that? Okay, we have an area here. Is it above the 50%? Yes, it is. Brilliant. Avoid any higher time frame conflicting bias ranges. So again, does this conflict with the higher time frame bias of this pair? No. This pair is bearish. This is euro to the US dollar. We are higher time frame bearish on this pair. So it's a pro higher time frame trend. It's pro structure in the current time frame we are looking at. So this range right now completely checks out. There's only one thing we need to do. Set our alerts and give ourselves an area to focus on. Now, I can't actually set an alert because we're in rewind right now, but this is going to give you a very clear idea of what you should be looking at for the day. So for example, this morning I came to the charts 10:30, there's a low, there's a high. What do we want to do? We want to sell. So until we get to the point of relevance, we can walk away, we can go out and walk our dogs, we can spend time with our family, we can maybe do some housework, whatever it is that you want to do, you can do that while you're waiting for this range to play out. Remember, less is more when it comes to trading. You don't need to be trading every single candle that forms. So now we've hit the higher time frame requirements, we can start looking at our entry time frame requirements. So it must have, number one, trackable structure moving into higher time frame requirement. So what are the higher time frame requirement? Well, a bearish range to start, brilliant, or it can be a bullish range. An area that's unmitigated or that shows momentum, preferably above the 50% of this range to show a clear efficiency within it. So that means we have to have a trackable 1 minute structure moving back into these higher time frame areas. So let's go down to the 1 minute and you will see exactly what we mean here. So right here, you can see that we have a structural high and the low for this is way, way down the bottom. We're not even going to bother highlighting that. We just want to see some very clear structural narrative here. Now, price rejects away from the high and we're looking for a break of this high. Cool. Now remember, we're not touching this price action or trading this price action until it hits a point of relevance within our range. This is where it's going to allow you to avoid a lot of the shit that occurs in the lower end of the range. There's your new low. Let's wait for the new high to form. Remember, if you're looking at this and thinking, I don't understand how he's tracking this structure, you make sure you reference back to the videos beforehand. And if you want to, you can join our Discord, join our live sessions, ask me questions yourself, and ultimately grow and learn with the community. The link for the Discord is down below. So still waiting here. Okay, so we break again. So we have two very clear breaks to the upside. So notice how this structure is very trackable here. Now, if we have a breakdown and price begins to tumble down from here, are we going to jump in and FOMO into a trade position? No, we're not. Unless it comes into an area of relevance or surpasses that area of relevance and hits an order block example, it's only for us to spectate, and we don't even need to be looking at this. Until we get up to here, we're just going to leave alerts running, okay? So that's your example there, a very clear, trackable structure. You can see the structure, it's very clear. Price is breaking higher, putting in new lows, putting in new highs. Let's go to the 15 minute and just wait for this to get into the area. Otherwise, it serves no purpose for us. Okay, now price is beginning to get into our area of relevance. This is where our alerts will start going off and we can begin to look on the 1 minute and actually track it. Instead of spending your time tracking price action from way down here just for it to get to this point and sell off. Doesn't serve relevance for us. Save your time, enjoy your time that you have, and minimize your chart time ultimately, giving you much more efficiency. So now we're in the area that we want to focus on, and we need to be tracking the structure so we have the overall principle playing out for us. So we're going to track it from this high because it's the clearest high. We're going to find where this goes so we can see that it gives us a high right here. If I can draw a line on that, it's going to give us a high right here. We're going to follow this back and find the low. There's your low. Where's our high? Our high is here, and the low for this is actually here. Now, we've had a break of structure, so that tells us we actually need to start looking at our entry time frame requirements and if they're being met. So let's pull this up here. I'm going to go to the 15. We're going to pull up our entry requirements. So what is our entry time frame requirements? So the last pullback structure must have a BOS in the pullback direction. We've covered that already. So structure has broken up. We saw that. Brilliant. A clear BOS into the trend / higher time frame direction. So that means we need to see a clear break down. Momentum and unfulfilled orders in BOS area. So we're looking for clear momentum. What's a clear sign of momentum? Imbalance and a fair value gap. What is an unmitigated order block? Generally, it's going to be an order block followed by momentum and an imbalance. So let's have a look and see if we actually had that in here. So we broke structure right here, which gives us a new high of here. So let's see if this area has a fulfillment for us. Straight away, we're seeing a big red flag. What's the red flag? The red flag is we have no momentum or unmitigated order blocks within this BOS, which means we are simply going to ignore this. We can retrack our structure, find our new low to high move. This is our range. What I like to do is once I determine the range, I will set alert on this. So you can click this here, set an alert and set it to close above. So you're not sitting here wasting your time when every 1 minute candle is formed going, just wait for it to do its thing. Okay, so we're having the first requirement met, which is a clear breaker structure in the pullback direction. Brilliant. Let's just wait for this here. Okay, so we have our new high. Brilliant. Where's the low? The low is here. So this is our range currently. Now that's kind of giving things away, but we're going to show you this example anyway. And we want to see price again breaking up here. Brilliant. We are looking for a breakdown. So until we get a breakdown, we're actually just going to highlight this stuff and get rid of a lot of it. Just clear up the space. This is our new low. Do we form a new high? Yes, we do. This is our new high. So this is our range right now. So we're looking for price to deliver a clear entry for us. Okay, we have another breaker structure to the upside, which is to be expected. This is a great example of if price is moving in one direction, expect it to continue. Wait for the high to form. Brilliant, there's our high. So we now have a new range right here. We've now surpassed the FVG that we were looking at. So let's reference back to what our requirements are here. So requirements, higher time frame. Is it a conflicting bias? No. Do we have a clear FVG or order block? Yes, we do. Okay, brilliant. Are we in that area? Yes. Is there trackable structure moving into the high time frame requirement? Yes, there is, because we've just been tracking it. The last pullback structure must be BOS in pullback direction. Is it doing that? Yes, it is. Brilliant. Let's go back to the 15 minute here. clear BOS in the trend direction. Have we had that yet? No. Okay, let's go down and have a look and see if we can get that clear break. So remember, guys, you'll be setting an alert on your high and low of your range if and when you're within here. So for example, right here, you would not have bothered tracking this until it's above the 50. So when it's above the 50, you would have seen this false break down here. So you're only really tracking this from sort of midday until around half past. You're talking 35 minutes. We're not sitting on the chart for, 4 or 5 hours trying to find this one little area. You've got a 35-minute window here that we're looking at the price action. And if you decide you don't like the look of it, you can simply walk away or set alerts and pop in and out. Okay, do we close out below this? We close out below this. Brilliant. So now we've had a break of structure in the trend direction, which is down. Now, for any of you that have looked into the buy side, sell side window live examples, you will know exactly what this area represents. A higher time frame order block, an area of reversal within order flow. But this is ultimately the simplified version of a lot of the higher time frame stuff and a lot of the more complex stuff that you guys are looking at. So we've seen a break of structure. Let's reference back to the 15-minute now so we can go back to our entry here. Clear BOS in the trend direction, yes. Is there momentum and unfulfilled orders in the BOS area? Let's go back and have a look. Yes, there is. So there's clear unfulfilled orders here. And we've broken structure here, putting in a new high. Do we create an FVG? Yes, we do. So there is a clear area for entry now. Let's go back to here. So now we're looking for our order requirements. The entry requirements. Orders must be set within an unfulfilled FVG/order block. So you have a choice here. You can go for this order block here. You can use this higher time frame order block, or you can cherry pick a small area to trade off of base within there. Now, I generally go for either the order block that causes the break of structure, so the higher time frame order block, which is this move, or I will enter at a fair value gap because sometimes you don't get the pullbacks to these points. So let's find our entry model here. Okay, stop loss must be protected by structure, last counter high. So where is the last high that was traveling against our directional bias here? Our directional bias is down. So the last high traveling in the counter direction is here. So your stop loss must be placed above here. Now, of course, this entry model, exactly the same as all of the others that we teach, is completely flexible to the individual. But for the raw basis of trading in a very consistent and overall having a non-discretionary way of trading, I personally, and I encourage you guys to do it, put your stop above this high, because we can have price playing around within substructure within here and still run bearish. Of course, it can go against you and you may take a -1, but that is part of trading. You guys know that. So now we're looking for price to play bearish from here, as we've confirmed. Let's just double check here that we're making sure we're hitting everything. Stop loss must be protected by structure. Brilliant. BE to be established only if price is able to create a new low or a new high within the entry range. So the entry range being the low that's formed after the break and the high that was last put in before the directional shift occurred. So that means, for example, you break down here, you establish your BE. Now, of course, it's completely fine if you don't want to manage your trade like that. That is completely fine. Target should remain with the higher time frame requirements. Range sells aim for higher time frame lows and buys aim for higher time frame highs. So because we're looking at a sell scenario here, our target is the 15-minute low. So let's go back down to the 1 minute. We place our sell position. We put our stop at the high. Now remember, you can allow a little bit of space if you have spread, for example, or if you just want to have that little bit extra cushion if price does decide to liquidate the high. Although the setups that work with this or will go into profit with this, it is rare, but it does happen. So, prepare yourself for any inevitabilities. Aim for the high. That's a nice 6.75%. if you're using a full percent risk. Of course, if you're using less, it's going to change, but it's call it 6R. So pretty reasonable. And all we're looking for now is price to tap into here and to run to our low. So let's just play here. Okay, there's the tap in. Brilliant. Have we broken structure after the trade is triggered? Yes, we've taken out this low here and this low here. So we're going to go break even on this and put our stop loss just above to cover for commissions. And then we're going to let price run down to the 15-minute low. Now, of course, there are ways that you can partial this out at given points of liquidity, but for this example, we are not talking about trade management. If you do want to get into trade management, then of course the Discord server is where you are going to be able to do that. Let's just play this out here. Price travels nicely, and we are now, I believe we're retracing slightly from where we were. Let's see, does it continue down? And we're continuing to sell off here. So that's brilliant. We're just leaving that as it is. And of course, not every trade works. There's always going to be trades that come back on you. There's always going to be trades that fail. But for this entry model, it is a very clear 3-step idea that you need to put in place. And it's going to allow you to alleviate your amount of time analyzing. It's also going to allow you to be a lot more free with the trades that you do take, because you're going to know precisely, I want to see this, and I know where I'm aiming for, and I know what I want to see. So let's recap to finish the video here. We need to find our higher time frame requirements, whether you're using the 4-hour, whether you're using the daily, whether you're using the 1 minute and the seconds. It is always going to be down to you. So we're looking for an area of relevance within there. Once you've found that, you can set your alerts, walk away, unless the range breaks out of the low or the high or gets into your area. You do not need to do anything except for sit on your hands. Once and if price gets to that area, you're looking for trackable 1 minute structure in the case of what I'm trading, 1 minute structure, and you do not want it to be conflicting with the higher time frame. So you don't want to be buying when price is actually trying to sell, vice versa. You guys know that. Once we have a clear break of structure with an imbalance or an order block that is able to be validated as momentum, you can begin to trade using the unfulfilled fair value gap that creates a break of structure in your favorable direction, so trend in this case. We want to use the last high established in the counter direction. We want to use the area of momentum and unfulfilled orders that cause the BOS to enter the position, and we're then aiming for the higher time frame. So you're always going to have a consistent target, you're always going to have a consistent area to enter, and you're always going to have a consistent model to follow without having to sit on the charts for 5-6 hours a day and letting everything pass you by. So guys, if you would like a copy of this with literature to match, join the Discord, link is down below. Of course, I'm happy to forward this image to people that would like it, and I'm also happy to walk you guys through this scenario in our live sessions in the Discord. So if you have enjoyed this video, guys, and you found this useful, make sure you backtest this and ultimately apply it to what you do. And I look forward to catching you all in the next one. If you've enjoyed this video, hit the like button, drop us a comment down below, and I'll speak to you all very soon, guys. Have an amazing week. Peace out. So just before we get into the good stuff, guys, and we get into this video, I just want to say, if you do find this content useful, please drop us a like and a comment. It helps us get to new people that are trying to learn, and it also lets us know that you appreciate the work that we put in. Enjoy the video, guys.